The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Oh, what busy days. Look, Cameron's having a quick slurp of tea before we get going. Good morning. This is Squawk Box. I'm Steve Sedgwick with the tea-fueled Karen Cho. And these are your headlines. Qualcomm and Arm both posted quarterly beats after the bell, but the stock slide as AI capex concerns dominate. Nissan reportedly suspending merger talks with Honda as shareholder scrutiny looks to scupper the $58 billion deal.
I'm just going to go with it now. SocGen's fourth quarter profits double amid a rebound in its retail banking unit, with full-year revenue topping targets and the lender pledging payouts at the top end of expectations. The French government survives two no-confidence votes, paving the way for Prime Minister Francois Bayrou to pass the country's long-overdue budget.
And it's rate day at the Bank of England, widely expected pretty much to deliver a quarter-point rate cut, the third of the cycle, with markets also eyeing a potential downgrade to growth forecasts. Please join us later on for my interview with the Governor, Andrew Bailey, 1600 GMT. Well, we've got CEOs waiting in the wings, but you've got to own your cup of tea in the morning.
Exactly.
Haven't you?
I can't believe you cheated and went for a proper tea. We do this thing together every morning.
Oh, I know,
we have a green
I
tea.
know.
We have
We're
a
such boring creatures of habit. The viewers don't really want to know this. They want to know about Arm, but I'll tell them very briefly. I normally have 3 cups of normal tea, then I go to a revolting green tea, which you make me have every day as my work wife.
3 cups of green tea.
But I'm actually going for another cup of, dare I say it, PG Tips or another bog standard tea. Shares in Arm and Qualcomm.
Yes, so let's talk about some of the fire in the markets around AI. Now, shares in Arm and Qualcomm both fell in extended trade, with the chip stocks underwhelming investors with disappointing guidance and prompting concerns of a slowdown in AI spending. Qualcomm beat on the top and bottom line in its first quarter, but issued weaker than expected estimates for its key patent licensing business and chip design. Topped third quarter expectations, but warned it will not meet the higher end of its full-year forecast. Qualcomm CEO Cristiano Amon told CNBC the recent developments at DeepSeek provide a tailwind.
Within days of the DeepSeek announcement, people were showing it running on Snapdragon phones, showing on Snapdragon PCs. As a matter of fact, Microsoft announced that DeepSeek R1 is running on Copilot Plus PC, starting with Snapdragon.
And we'll have more from the chip sector later today when our US colleagues speak to Arm CEO Rene Haas. That is the first on CNBC interview coming up at 1500 GMT. So to me, what we're seeing in the after hours, is it a story where the investors simply don't care about smartphones? I mean, what you saw in the numbers was that both companies did well in the latest quarter thanks to their smartphone exposure. But we know the market has now shifted towards data centers and cloud. I mean, that is pretty much the end game, all about AI infrastructure at this stage. And I wonder whether it's the positioning in these areas that is holding both of these companies back now. In terms of what you're seeing from Qualcomm, it has been very dominant in that mobile market, but also having to diversify to autos, to PCs. And as we talk about the diversification, it is part of this symbolic shift that you're seeing in AI, where existing moats that used to be there for a lot of businesses are coming down. Other big players that used to be in their lane are now stretching into other business models. So, for instance, Qualcomm supplied for many years to Apple certain chips. Apple, after a certain period of time down the track, will go its own way producing those chips. So, again, you're seeing this change in business models, and these companies are having to adapt. So I think that's what you're seeing, some uncertainty in the earnings. But the reality is there's one big feature here that the market could be missing, and that is the edge. We've been talking about the edge for years at big tech events. It sounds a little bit boring, but basically it means that AI is on your device. It's not in the cloud somewhere, or that big infrastructure that Microsoft, Amazon, and NVIDIA are building out. This is on your device. So it means you're not handing information over to a cloud to process. So these are two companies at the forefront of AI on device.
Okay, well, let's park that for now, and we'll move on to ING as well, because I've got numbers hitting the wires from ING. The net profit, 1.15 billion euros in the fourth quarter. One might argue that is a tad below the company compiled consensus, which was 1.22 billion. There's the performance of the share. The one-year performance is very, very solid. If you're looking at the valuation, it's not at the bottom of the European roster, but it's towards the top. 0.9 price to book, trades on 8 times forward as well. Cash divvy proposed of 0.71 euros per share. Total income in 2025 is expected to be roughly at the same level as 2024. Total expenses up to 12.5 to 12.7 billion euros. And Karen, you and I have beautifully crossed swords in a very noble and gentle way regarding capital spend of European banks and where they are focusing as well. And I think we've had a couple of fascinating conversations about HSBC, who are redirecting capital and M&A away from Europe and into Asia, for instance. And then we had a terrific conversation yesterday with one of the most powerful people in global banking, and that's Anna Botín. And she was talking about the M&A situation, the growth situation, the not necessarily needing to sell anything in order to get involved in the M&A activity. And I thought that was a fascinating answer to your question.
Yeah, I mean, we spoke to the CEO of ING when we were in Davos, and the comments from here was that we need more harmonisation in Europe around regulation. So I think for some of these big banks that are looking to be more active on the M&A front, the change in the landscape around regulation still matters. CMU, banking union, I mean, we've spoken about it a lot. Until that green light is delivered for the banking sector, I think it's going to hold some of these banks back. They're going to be a bit more cautious. But after what Andrea Orcel has done in the banking system, I think most are now being spurred on to think about plans, to think about potential prey, and trying to ensure they have the capital provision so they can unleash some of that firepower if need be.
Just to finish the roster of banks we're talking about, Société Générale, full year net income surged 69%. Isn't that extraordinary? 69%. Talk about SocGen, net income. Let's move on SocGen rather than Siemens. SocGen, full year net income surged 69% to 4.2 billion euros, whilst annual revenue growth exceeded the bank's targets at 6.7%. The French lender said it will target revenue growth of more than 3% this year and cut costs by more than 1%. Right, let's get to Siemens Healthineers. There's been a minor technical snafu in the background, but I'm delighted to say we have the CEO waiting in the wings.
I might just get to some numbers
Bernd
first.
Montag, who is the CEO, yes.
Yeah, let me just do some numbers first up so we can just set the scene for this. First quarter revenue of 5.48 billion versus consensus of 5.37 billion. So a beat on the revenue line. The adjusted basic EPS of 0.51 versus consensus of 0.47. So also a beat on that line. On the comparable revenue growth of 5.7%, consensus was 3.6. So we do have a beat on these numbers, and the company also backing its 2025 view. On that note, let's get to Bernd Montag, who is the CEO of Siemens Healthineers. Bernd, thank you so much for joining us. Just digging into that revenue picture a little bit further, US revenue increased 16%, whereas China declined 6%, and this is blamed on continued delays in customer orders. Just explain the two markets to us, how they're faring.
So we are very happy with the momentum in the United States. We see a lot of interest in our product, in our innovation pipeline, and especially also in us as a long-term partner for the big institutions. While in China, as expected when we went into our fiscal year, we still see a little bit of muted demand here because of the uncertainty of customers around the nationwide anti-corruption campaign.
But let me ask you about the China market in particular, because a ton of geopolitics, trade tariffs and sentiment getting in the way now as we talk about a Trump presidency. You've been working on a research and development facility in China, a very big facility. Talk to us about how you're thinking about the Chinese market and whether anything's changed now with the Trump presidency and how you navigate some of those headwinds.
We have in China a very local operation. Yeah, we have about 8,000 Healthineers in the country, 1,000 of them in R&D, and a lot of the demand of what in China is fulfilled by the local operations. Yeah, so it is more and more becoming a from China to China a game, of course, benefiting from our global strength and our global innovation power. So typically there's almost no goods flowing anymore between China and the United States in our supply chain.
Ben, very good to see you today, or hear you at least. The reforms in Germany are very interesting under the Health Minister Karl Lauterbach. But how much do we need more financing going into such a system such as the hospital system, the hospital network in Germany and elsewhere in Europe in order to get it up to where it needs to be?
Well, first of all, we are very happy with our business in Europe, which is especially after COVID and after also from a long-term point of view, the euro crisis at a much, much higher level. But certainly in Europe, as in many other geographies, it is very, very important to have a functioning healthcare system, which is up to the demand for the non-communicable diseases. There's more cancer, there's more cardiovascular disease. So I believe the reforms make sense, because it's very much about specialization, about creating scale in the system. And I'm sure that healthcare remains a priority of European governments.
And will a change of government in Germany, in your view, Bernd, add a further catalyst to that reform?
I mean, for me, the point in Germany and Europe is more about a climate which is reigniting economic growth. For us, I mean, Germany is, of course, an important market on the one hand, but on the other hand, being a German company, still only about 6% or so of our revenue line is achieved in Germany. Yeah? So the German market is important, but it's not the exact growth number is not mission critical for our business. Yeah? But I believe that there is hope that with the new election, with the new government, any new government in place, that there is more decisiveness in making the country ready for the future. And this means, on the one hand, reigniting the economy, but also further do reforms in the healthcare sector.
But can I ask you about how you see the opportunity in the UK? Because I know the Chancellor was at your magnet technology plant in Oxford recently. Do you see this Oxford-Cambridge growth corridor moving the needle on earnings for your company down the track?
Yeah, I mean, we are very, very happy with with what we are doing in Oxford. I mean, we have announced a big expansion of our factory and innovation center for superconducting magnets. This is where Oxford is the place for us to innovate for the world in that part of magnetic resonance. And the other aspect in the UK is, and I believe also here making the NHS even more future ready, with using innovation, using AI, using modern technology to overcome the barriers in access to care to the British population is certainly an opportunity for the country, but also for us.
Bernd, thank you so much for joining us today. Bert Montag with us, the CEO of Siemens Healthineers.
Right, coming up on this show, earnings season continuing apace here on CNBC. We're going to hear in a couple of minutes' time from the CEO of Volvo Cars as the company reports its fourth quarter numbers. That's after this break. Plus, the French government survives 2 no-confidence votes in a day as it clears the path to adopt the 2025 budget. More later this hour. And don't miss our interview with the CEO of Carlsberg coming up at 7 GMT.
The Nissan CEO has reportedly met with his Honda counterpart to end their merger talks. That's according to multiple reports. The two car makers announced an intention to merge in December, but according to the Financial Times, talks soured over Honda potentially making its rival a fully owned subsidiary. Bloomberg reported today that Nissan could be seeking a new partner to secure its future.
Very quick look at the Volvo car figures. Maintains guidance on outgrowing the market between 2023 and 2026 on a CAGR basis. That's a compound annual growth rate for those of you who love an acronym. But expects market to remain weak in 2025 due to a multitude of competitive and geopolitical challenges. Jim Rohn is the CEO of Volvo Cars, and we always learn something speaking to him. Jim, thank you very much indeed for finding the time to speak to us today. Do you want to just run us through the competitive and geopolitical challenges?
Yeah, maybe I'll start with 2024 because we just unpacked that year. So we were pretty happy that we grew the business by 8%. We achieved our highest ever revenue at 400 billion SEK, and we achieved our highest ever profit at 27 billion SEK. And of course, we were driving, much more EVs. EVs came in at 23%, which was up from 20% the previous year. All of that together, I think is a reasonable performance given the amount of turbulence that we saw even in 24. In 25, I think we're going to see that turbulence increase. And the way I frame it up is I think we're going to see turbulence in terms of trade tariffs, maybe some geopolitics, and we're going to see some policy changes. I also think we're going to see the transition to EV slow down a little bit, which is okay for Volvo Cars because we have mild hybrid technology as well as plug-in hybrid technology. So we can modulate, if you will, our models into each of those markets. And then we're going to see this big shift to technology beyond electrification. So that software, silicon, connectivity, and data, that's going to become a lot more profound in the products 25 and beyond. So that's how I see 2025 shaping up. It's going to be a tough year for the industry, but I think we're reasonably well positioned.
Jim, do you want to just go to the elephant in the room, which is trade wars, concerns about bringing in parts and vehicles from Mexico and from Canada as well? Just tell us how you're positioned stateside.
Yeah, so 24, we saw that play out for really in the first phase, which was the increase of tariffs for EV cars coming from China into the European Union. So that went from roughly 10% to 30%. So we've had to absorb that, and we're actually relocating production from China into our Belgian facility to help navigate through that. The next wave, if you will, looks like that's going to be focused in on the US. We've already saw some movements in terms of Canada and Mexico. And also last year, we saw batteries increase from 7.5% to 25% when you import them to the USA if they're originating from outside the USA from a country without a free trade agreement. So we're going to see more of that. We need to wait to see how it plays out, of course, but we're preparing ourselves to see whether we need to start looking at production relocation or even supplier relocation to different parts of the world. So it's going to be turbulent. As I say, that's going to be part of the challenge for 25.
Jim, let me tackle pricing with you because you've made some comments this morning about increased discounting. I know in the Chinese market that Tesla has had to launch its biggest discounted package for mid-range EVs so far this year. But what are you seeing more broadly? Is it China discounts we're talking about here, discounts in Western markets? What are you expecting this year on EVs?
Yeah, it really bifurcates because if you look at China, the discount is focused mainly on the entry, the mass market EVs. That's where you see most of the discount. We don't really play in that sector. We sell mainly mild hybrids and plug-in electric hybrids in China, and we play in the premium side. So we don't get anywhere near as affected as some of our competitors do within the China market. That said, I think we'll start to see maybe in 2025 some additional discounts that may start to encroach on the premium market as well. As some of the Western brands lose market share in China, then of course they're going to retrench into their domestic markets and the other global markets and try and pick up market share there in order to keep the revenue streams at the same level. So I think it starts into the hyper competitiveness and the price indiscipline, let's call it, starts in China, but I do think that will permeate through Europe and into North America as well through 2025.
Jim,
but again, premium will be less affected than mass.
Jim, that's extraordinary because we know this is an industry already under pressure and battling the margin story. So if we're seeing greater discounting in Europe and the United States in the quarters ahead, what sort of discounting are we talking about and what impact do you think it's going to have on margins, in particular even for your company?
Well, that's where you need to look at the strength of the brand and the loyalty of the customers. So we have a very strong brand. We have very loyal customers. People buy Volvos because they care about our brand attributes of safety, first and foremost, sustainability, we use human-centric technology as opposed to technology for technology's sake. And we have wonderful, I think, very unique Scandinavian design. Unless you have something which is differentiated in the market and you have a loyal customer base, I think that becomes much more difficult. I also think it becomes much more difficult if you're in the mass market versus the premium market. And so, at Volvo Cars, I think we're reasonably well positioned. We have mild hybrid technology, we have plug-in hybrid technology, we have EVs. We also operate in the 30, 40, 60, 90 size SUVs, wagons, and we have a very differentiated brand position. So, nevertheless, it will be turbulent across the industry, but hopefully we're a little bit more protected than many of our peers.
Jim, I just want to revisit those early comments around tariffs and what you're dealing with here. Clearly a lot to navigate, but I do wonder whether your ties to China and the ownership by the Chinese is becoming a problem. We've got tariffs, but you've also got negative sentiment around national security and Chinese technology. If there is an avenue for the Chinese to seize certain technology, particularly when it comes to cars, is the Chinese ownership a problem now as we talk about a Trump presidency?
Well, we've saw ICTS, which is the new legislation, which has been muted, and that's still to play out. So we'll see. That will start to be fully unpacked. What ICTS means, which is the in the USA, I think, is what you refer to in terms of that security concern. So we'll see. We'll get a good look at that probably sometime around the middle of March, and then we'll be able to figure out exactly what we need to do in order to be ICTS compliant. At this point in time, we still need to wait for the full legislation to unfold.
Jim, the balance between hydrocarbon and electric vehicles and hybrid is something that you're having to play with all the time. You inherited a position where you had a path and it's had to be rowed back a little bit as well. How difficult is it to negotiate the transition when policymakers are so volatile in the support they're giving to the electric industry?
Yeah, well, it doesn't help. It adds to that turbulence that we spoke about earlier. And I think it's if governments are going to make policy, that's fine. That's obviously for them to do. But then to stick with that policy for a period of time, because in industry, especially in the auto industry, when you're making large scale investments of billions of dollars, you're doing that well into the future. To set up a new car factory, for example, in a specific geography, is a 2-3 year project. And if the policy is changed, halfway through that, then it becomes troublesome, obviously, to try and navigate those positions. Again, we're lucky we have manufacturing facilities in Asia and Europe and also in North America, and that's allowed us, in the recent instance when we've relocated some of our products from China to a Belgian facility, we could do that because we had spare capacity there. So, but yes, indeed, it is what I would like to see. In terms of the policymakers, if you look at Europe, I think Europe has fallen behind in terms of its productivity. It's certainly fallen behind the US and China. And I think within Europe, we need to understand how we can build that new technology for the future in Europe, if you like, for Europe. And we have great learning institutes across Europe. It would be good to see governments lean in and develop the programs for next generational skills that we need for that young talent to come into industry.
Absolutely. I know you've got to go in literally 1 minute's time, but do you want to talk to me about the U-turn on estate cars in Britain? I'm just asking for a friend, Jim.
Sorry, say that again, please.
The U-turn on estate cars. I know a lot of people out there who like their Volvo estates and don't want a four-wheel drive.
Yeah, I can only talk about our cycle plan roadmap, let's call it that. I can only talk about that when we're ready to release those new models to the market, I'm afraid.
Okay, but you did do a U-turn on V6s and V90s, the sales in the UK, though, didn't you?
Well, I don't know that it was a U-turn. I mean, I think we had signalled, our roadmap going forward. But we continually look at the market and what the market wants and what the market needs, and then we modulate that with our cycle plan accordingly. So, and sales in the UK are fantastic. I mean, it was one of the top performing markets for us last year. In fact, I think it was probably the top performing market in terms of market share. So there's certainly enough in the UK that people like in our product portfolio.
Yeah, absolutely. Jim, I've got to let you go. Thanks very much. As I say, just asking for a friend who may or may not like your Volvo estates. Thanks, Jim. Jim Rowan, CEO of Volvo Cars. Other states are available. Ford shares hit the brakes in extended trade after January sales dipped on weak demand for internal combustion vehicles. And the car maker forecasts lower profit for the year. It sees up to $5.5 billion in losses on its EV and software operations this year, broadly in line with 2024. For the quarter, in the fourth quarter, revenue beat expectations, coming in at more than $48 billion. There you go. Mr. Farley, CEO Jim Farley, told CNBC that President Trump's tariffs could spell trouble for US automakers.
If this persists, this tariff persisted with Mexico and Canada, it would mean billions of losses for the domestic car industry, huge impact for jobs in the U.S. And the administration knows that, as well as congressional leaders. They know that Ford is the most American car company, we produce the most, and they have committed to us to strengthen our industry and not weaken it.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.